Mr. President, relief for Americans is on the way. This evening, we'll vote on the first comprehensive overhaul of our tax code since 1986. Mr. President, in 1986, I was a young Senate staffer. I watched as that tax bill passed on the floor of the United States Senate. I was a 25-year-old staffer back then. In a couple of weeks, my wife and I will welcome our third grandchild into the world. So it seems only fitting that after about 30 years that we go about the business of reforming the tax code, because a lot's changed in this country. A lot has changed in this country in the past 30 years. The one thing that hasn't changed is the tax code. Our tax code needs to be updated and modernized to reflect the times in which we live. Since President Reagan signed the last overhaul into law, our tax code has ballooned into an unwieldy, complex maze that costs American taxpayers an incredible amount of time and money and acts as a drag on economic growth and job creation. And Mr. President, I will say that when I got elected to the Senate, I came here like most of us do because we want to do big things. We want to do consequential things. We want to do things that will impact the American people in a beneficial and a positive way. And that's certainly the case with tax reform. And I sought to get on the Senate Finance Committee for that reason. The Senate Finance Committee has jurisdiction over tax and trade and health care and issues that really impact and affect the American people's everyday lives. And so in 2011, I get the good fortune of getting on the committee. And ever since that time, Mr. President, we have been working aggressively, planning for this very day. The suggestion by our colleagues on the other side that somehow this cropped up all of a sudden overnight is just absolutely inconsistent with the facts. Since I got on the Finance Committee in 2011, we've had no fewer than 70 hearings on tax reform and tax-related issues. In 2015, the chairman of the committee, Senator Hatch, created 5 working groups. I was fortunate enough to chair one of those working groups. They were bipartisan, and they were tasked with looking at all aspects of the tax code, broke it down into 5 different sections, and to make recommendations for tax reform. And so we went about that in a very diligent way. We spent weeks and months developing ideas, reported those recommendations to the full committee, and those recommendations today serve, Mr. President, as the foundation for the legislation that we're considering. And that was a bipartisan process. The Democrats participated in that. A lot of the suggestions are bipartisan ideas. The foundation for this legislation, frankly, in many respects, Mr. President, originated with those working groups that were worked upon by both Republicans and Democrats. And so we stand here today with a piece of legislation that has a lot of bipartisan substance in it, even though the Democrats have refused to participate in the process. But we started out with 2 major goals with tax reform. One was to put more money in the pockets of hardworking Americans and to create a tax code that would foster economic growth and make American companies competitive again in the global marketplace. Those are the 2 goals, Mr. President. The bill before us today, the Tax Cuts and Jobs Act, succeeds on both fronts. The bill provides immediate direct relief for hardworking Americans starting next month. It lowers tax rates for Americans in every income bracket. It nearly doubles the standard deduction, simplifying the code and meaning that fewer people will have to itemize. Across the country, it varies state by state, but there are less than 1/3 of the people, on average, who itemize across the country today. Well, this will lessen that number even further. There will be fewer than 10% of the people in this country who will have to itemize because of the doubling or near doubling of the standard deduction. The doubling of the child tax credit and significantly increases the refundable portion of the credit will provide important additional help for low-income families, and it maintains the earned income tax credit. All this means, Mr. President, that American families are going to see a significant drop in their tax bills for next year. And just as a case in point, a family in this country, a family of 4 with a combined annual income of $73,000 per year, will see a tax cut of over $2,000. That represents a 58% reduction over what they are paying today under current law. If you are a single parent with one child, an income of $41,000, you are going to see a $1,300 reduction in your taxes, which represents a 73% reduction over what you are paying today under current law. So the idea has been advanced by the other side, Mr. President, somehow middle-income taxpayers don't benefit from this is just absolutely false. It is inaccurate, because these are objective facts. A doubling of the standard deduction, a doubling of the child tax credit, a reduction in rates means that people in all income groups are going to see significant tax relief. And just to put a fine point on that, this is based on the latest analysis by the Joint Committee on Taxation. They assess and look at how these proposals will translate in terms of income groups and who gets impacted by that. And I want to point out that if you look at income by level here, different groups and their incomes, as you can see, every income group receives a significant tax cut. And in fact, lower income Americans receive the largest tax cuts, and that again, according, Mr. President, to the Joint Committee on Taxation. The point that was made earlier by my colleague from the other side was that somehow, that this was going to be a huge tax shift in terms of who's going to pay taxes after all this is said and done. Well, if you look at the tax burden, and by that I mean who pays taxes in this country, the share of taxes currently borne by each different income category. As you can see from this chart, and this is broken down, this is about by quadrant. 25% of the filers are in this category, 25% in this category, 25% in the 50 to 100,000 in income, and then the final 25%, the final quadrant, is those making $100,000 and above. Well, if you look at those in the lower income categories, and this according to the Joint Committee on Taxation, their share of the tax burden relative to what it is today is actually the same or lower. So those in lower income categories, those making $20,000 to $50,000 a year, and that represents about 25% of filers, today pay 4.3% of total taxes in this country. After implementation of the bill, they will pay 4.1% of total taxes in this country. Their overall tax burden will have decreased after passage of this legislation. You take the next category, the 50,000 to 100,000, and they pay today, under current law, 16.9% of the total tax burden in this country. After this legislation is passed, they will be paying 16.9% of the total tax burden in this country. So what about those making $100,000 a year and more, which represents about 25% of all filers? Well, Mr. President, according to the Joint Committee on Taxation, on which these distribution tables are based, those in that income category who are paying today 78.7% of all the taxes in this country, after this is passed, will pay 79.1%. So their overall tax burden actually goes up after this legislation is passed and enacted into law. Now, interestingly enough, Mr. President, this is the most recent analysis by the Joint Committee on Taxation. This is the distribution table that they just put out. The category that has the biggest increase in terms of overall tax burden is those making $1 million a year and more. Today, they pay 19.3% of all the tax burden, all the tax liability in this country. After this is all said and done, they will pay 19.8%. So their taxes, those $1 million and more, are going up under this legislation. So this idea, they keep saying it on the other side, but just because they keep saying it, Mr. President, doesn't make it true. The facts tell a completely different story. These are the facts. And again, I come back to the point I made earlier, and that is, let's put it into language that people in this country understand. When they go do their taxes, they are going to see a doubling of the standard deduction. They are going to see a doubling of the child tax credit. If you're a family with kids in this country, that means that for every child that you have, instead of getting a $1,000 child tax credit, you will get a $2,000 child tax credit. Couple that with the lower rates, and the rates are going to be the marginal rates with a 10% rate, a 12% rate, and where those kick in different brackets, you're going to see significant reduction in your taxes across all income groups. That's just the reality. And so I think it's important, Mr. President, that we at least, as we're talking about this subject, talk about it in terms of the facts. Now, the Tax Cuts and Jobs Act also preserves elements of the current tax code that have been working for Americans. Under this bill, homeowners and those aspiring to own a home will still be able to deduct their mortgage interest if they itemize on their taxes. Individuals who donate to charities, to churches, and to educational institutions will still be able to claim those contributions as an itemized deduction. And working Americans will retain all the current options for saving for retirement, from individual retirement accounts to the various types of employer-provided retirement plans like 401ks. This bill also provides families with permanent relief from Obamacare's burdensome individual mandate, which is a tax on lower-income Americans. Under the Tax Cuts and Jobs Act, Americans will no longer be required to buy health insurance that they don't want and can't afford, or face significant financial penalties, which today disproportionately fall on those who make less than $50,000 a year. Mr. President, this bill also restores the deduction for major medical expenses to where it was before Obamacare. For this year and next, Americans facing the burden of significant medical expenses will once again be able to deduct any expenses that exceed 7.5% of their adjusted gross income. I hope that Mr. President eventually will be able to make that change permanent. But that's not all this is going to do. It's not just going to help Americans now. It's going to help them for the long term. It's going to give them access to the kinds of jobs and wages and opportunities that will set them up for a secure future. And how does it go about doing that? Well, it rebuilds our broken tax code into a modern tax system designed for a 21st century economy. In order for individual Americans to thrive, American businesses need to thrive. Thriving businesses expand. They hire new workers. They can afford to offer those workers higher wages. But our current tax code has not been helping businesses thrive. On the contrary, Mr. President, it's been strangling businesses large and small with high tax rates and provisions that discourage growth and drive those good-paying jobs overseas. Plus, our outdated tax structure has left American businesses at a competitive disadvantage in the global economy. Well, this legislation changes all that. This bill lowers tax rates across the board for small and medium-sized businesses, farms, and ranches. It provides a 20% deduction on pass-through income, reducing the top effective tax rate on this income to no more than 29.6%. It permits businesses with gross receipts of up to $25 million to use the cash method of accounting and to expense their inventory costs. It allows businesses to expense new investments in machinery, equipment, and building improvements. And it expands the amount of startup and organizational expenses that new businesses can write off up front, freeing up cash flow to get the business up and running. Mr. President, accelerating businesses' ability to recover the money that they've invested in things like property, equipment, and inventory will encourage new business growth and help existing businesses, including farms and ranches, expand their operations, create new jobs, and grow the economy. The bill also helps family-owned businesses, farms, and ranches by providing substantial relief from the death tax. Now, I would have preferred to eliminate what I think is a confiscatory tax once and for all. But in this legislation, we double the current exemption to over $1 million, and by doing that, this bill will take a vast majority of family-owned businesses, farms, and ranches out of the tax's crosshairs. Too many of these businesses have wasted tens of thousands of dollars a year on costly estate planning simply to avoid the death tax and to preserve that family business for another generation. That's money that these individuals would rather be investing in their businesses and their workers. Mr. President, this legislation allows these businesses to save critical capital for their businesses instead of forcing them to spend it to protect themselves from the heavy hand of government. In addition to improving the playing field for small businesses, the Tax Cuts and Jobs Act will boost our economy by lowering the tax rate for larger businesses. Right now, America's global businesses pay the highest corporate tax rate in the industrialized world. By reducing the corporate tax rate to 21%, this bill will allow American businesses to compete and win in the global economy. And just as importantly, this bill brings the U.S. international tax system into the 21st century by replacing our outdated worldwide tax system with a territorial tax system so that American businesses are not operating at a disadvantage next to their foreign competitors. We haven't talked a lot about this, but one of the most important reforms, Mr. President, in this bill are the changes that we make to the international tax system. This bill also eliminates the incentives in our current tax code that have encouraged companies to shift jobs, profits, and manufacturing plants overseas. And, Mr. President, this bill makes it easier for American businesses to bring home foreign earnings to invest in growing jobs and paychecks in our local communities here in America. Lowering the corporate tax rate and transitioning to a territorial tax system will boost wages, jobs, and opportunities for American workers employed by our nation's global companies. And it will also increase wages, jobs, and opportunities for workers at the countless small and medium-sized businesses throughout our country that make up the supply chain for America's global companies. Mr. President, that's a resounding win for American workers and businesses and for our economy overall. This bill is the product, as I said earlier, of literally years of work by members of both parties. I'm excited to be here as we get an opportunity to take this bill across the finish line later today. Mr. President, I yield the floor.